Great. Hi guys, it's Josh.
Hello? Can you hear me now?
Hello? Can you hear me now?
That's much better.
That's much better.
All right, guys. What I'm doing here is I'm tracking Macy's, but I want to look at the year-on-year data. How do I stretch this? Do I have to use the other, like this, right? Let's contract. All right, so I'm just gonna I'm gonna highlight and look at the year-on-year data. Can I even annotate this? Yeah. So I'm looking for the quarter activity at the end of the year in these windows. So I'm just going to shift through. Here's the earnings report on 11/17. So I'm looking at the third quarter earnings reports for the last 10 years on Macy's stock because it's a thing. It's an American thing. It's one of the oldest American malls. Macy's is one of the oldest American malls. In here in New York, we still have the Thanksgiving Day parade that goes down Broadway to Herald Square to the Macy's store. And it has a long history in American culture. And it sort of is iconic in sort of tracking, especially in 2025, wherein how America is doing in terms of consumer psychology and sentiment, say compared to the monstrosity of Singles Day in China, which is almost 400 billion now or something. 400, like crazy day. Like even the last day went up like 10%. You're not seeing it in Western media so much, but I mean it's so huge. Serving the middle class of China, and it's just downplayed so much in American media. So that's sort of the elephant in the room kind of thing, right? But we're going to go through, I'm just putting up this red window. So we're going to go through each year, sort of looking at what happens, what's going on with these metrics, and these just basic indicators. So I'm just going to set this up again. And I'm going to put a time window up for 3 months. Let me try and stretch this out just a little bit more. Yeah, like that's good. So that's going to show weekly data between for like 12 weeks or 14 weeks so that we can see the candlestick chart, the weekly candlestick chart on what's kind of going on from the third quarter to the new year. Because and also depending on the presidency, it also and they're sort of like President Trump is a really good bull catalyst for the stock market. It always seems like, oh, the stock market's going to crash, and somehow his financial team or his financial network rescues it, and we go to another bull market for another straight through his presidency. This happened last presidency. So let me just check those years again as I do this sort of visual back test of the data. But again, I'm just tracking price and volume here, and the MACD and slow stochastics, which are just basic oscillators, just to see like what's going on and what they say. And then I'm also looking for any insider trades. I mean, I don't do it that much anymore. I don't really look at the Greeks, and I don't really look at the like Vega and Beta and Gamma. But I was into it, but I'm very busy doing my math work, so I haven't been doing much analysis. And I even, when I was at Columbia, I even had created that template for that quant class, but I just haven't had time. The reason I'm doing this is because I recommended Macy's stock. I recommended Macy's stock to the school, the Catholic school I worked at last year in October, and I said you should buy Macy's stock now because end of the year it like it goes up. It's volatile. Like buy when it's low, when you see it low in the fall, and just see it rise. You can even sell. Like what if it goes up $1 or two, then sell your share. You have more money for the holidays. So suffice it to say, I'm still recommending Macy's as a as a stock to track. Whether you like stuff at Macy's, I used to love getting toys or gifts or clothes from Macy's all the time when I was growing up. My mother liked to shop there, or Bloomingdale's, or and we weren't rich or anything, but it was just a store that we looked forward to shopping at for some fun things, and even go visit Santa there or something, or just the end of the year. So that's what we're gonna do with this video stream. I'm going to just gonna try and go to my channel here to see what it looks like live. Okay, that's me. This is the screen I'm sharing. So again, I'm just stretching it out, and I'm gonna put a window up here for about 15 weeks, 15, 16 weeks maybe, because there's 52 weeks in a year, but quarter to quarter, right, with an extra two. So see how it enters the quarter, see how it's performing sort of the 3 weeks before and 3 weeks after. And as you can see here, that's going to be the red window we're going to be looking at for 10 years, a 10-year tour, year on year. So let's go back and see what Macy's is showing us. So I'm just scrolling back. And wow, it traded at 70 and 80. It's currently trading at about $19. This is a Macy's. I think it closed at 1940 today, and then after hours is at about 1960. So I'll type that on the screen as well. So what is this stream? This is a Macy's. M stock. And we're close was 1940, and extended after hours. It's trading at about 1960. But the point here is that uh, this is just research. We're sort of back test look at the year on year um, Q3 to Q4 uh, movement momentum. Okay, so we're gonna look at 2015 to 2025. So it's not always, I mean, I remember taking the quant class, and several of the hotshots on Wall Street said, when you're doing back testing, when you're looking at back data for 10 years, and you're going to use a computer to do this and use your indicators, then you're looking for trends so that you can predict what to do with your portfolio investment for the upcoming year. So then they would always quote some financial guru saying, the back test is not always a reliable indicator of future events and stuff like that. So you have to take it with a grain of salt. But I'm just looking at the trends, and I'm just gonna write down what the behavior of it is as we go into Q3 and then exit in Q4. So the months are sort of like October to February, January, October, November, December, and then exiting January. Right, so October to December, really. So the Q3 report usually comes in November or first week in December this year. So then it's really looking at 3 months, because the quarter, November, December, January is what this window is going to be looking at for this year. But in previous years, it looks like it's October to December. Well, let's get started. So we're going to go back, and I'm just going to be writing some notes. I might have to do a double recording of this, but oops. But here we go. So going back. Wait, there's no. Wait, where's the earnings? No earnings? 2012. No, I said 10 years. Oh, so we can go back 13? Yeah, so we can go back to 13. All right, so here's the earnings report for 2012. So I can go back to 2012. So you can see there at 2012, it opened at 40.54. The candle traded that week down to 38, and the volume was on that red candle was high, and you can see a volume spike here. On a down day. So these are the Bollinger Bands, and that's 2 standard deviations. So it didn't sort of ride up here in this window. But if you bought here at this low point, then you'd have to hold till that's March, next quarter. Go back a little bit. I said I'd do 3 weeks before. So then on earnings day, which was on November 6th, it looks like 2 weeks later, if you bought on earnings day, it looks like 2 weeks later on the peak was here. November 19th, the week of the November 19th. And then it went down below the 200-day moving average. It went down below 2 standard deviations even. No, it's the 50-day moving average. 50-day moving. I'm using 50, 20, 50. So 20 days on Bollinger Bands and 50 is, that's the 50-day moving average. No. Oh, so then the blue line is the 20-day moving average, and then that's 2 standard deviations above. That's 2 below. So it bounced right off. It didn't even go, it went about 1.75. Didn't even go above 2 standard deviations. And then consumer sentiment went down as we went to the holidays. So that was 2012. So let me just check who was the president during those years. Right. So Obama, he was 9 straight years, 2009 to 2017. So not bad for the stock market, but notice at the end of the year, because this is MACYS, once we hit Christmas, it was down 2 standard deviations. And then that would be your next opportunity to buy. You could buy at 37, and then it spiked up to 50. So that's a 20% gain. So then the strategy for 2012, if you bought low here, then you would buy in July. No, the first run up, the first dip here would be late September. And then you're holding, waiting for this report. See, that would be the low here, or the low here, October 22nd, maybe 2 weeks below the report. So there's activity for the report. It's oscillating here, and the slow stocks are above. But once it death cross, like definitely it's showing mean reversal is what I'm saying. So it's definitely still a brick and mortar company in 2012 that's showing that if it bounces to its low with the Bollinger Bands here, you should definitely buy. If we bought here at the lowest point on the Bollinger Bands, where it's dipping down here, and this once it golden crossed, you'd be buying at 34 on July 2nd, so 7-2, buy at 34. And then here where it death crossed, I mean, if I just use basic strategy, on September 4th, this is long-term strategy, or using weekly candles, buy at $34 and then sell on 9-4, and it looks like it's at 40. So that's $6 per share on 34. So that's like 15%, right? Because 10% is like $3.40, and then plus 1.7 would be about $5. So more than 15% gain. All right, even just following the basic idea of a good mean reverse stock. So it looks like the activity here, there's a small run up after the earnings with a surprise percent of 22.3. Remember, it's after election day, and we're going into the holiday season. But then, it often turns to tech stocks because even though Macy's carries technology, the money is going to go to Apple. It's going to go to any of the other Amazon, the sort of classic seven. Remember, this is a shop. It's a brick and mortar shop. So this is going to go to the magnificent sort of seven stocks are expected to be bullish, during the holidays as we're rah, 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 wrapping up the year, and it's been a good year, right? So 2012. So it looks like a better plan would be for 2012, wait on this dip. So then if this dip is on January 7th after the new year, so I just want to write all this down so I can see trends and see what to do. But it looks like as of 2012, it was still being reversed. So for example, for 2012, if I'm like, okay, school is starting again, and I'm looking for an opportunity to buy Macy's, I would buy July 2nd on the dip, and it looks like it was trading at 34. Sell on this death cross here, which was 9/10, September 4th. And there it peaked at about $40. Again, I'm just rounding to the nearest dollar. 34 to 40. So that's a $6 gain. And then move the money somewhere else, right? But if I wanted to re-enter here, again, I can't really use the slow stock indicator, but I would maybe if it bounces off the simple moving average, 20-day moving average. So I'm using 20. So it looks like because of the volatility around this earnings report that if you bought on earnings day, so this earnings day, buy, sell. Looks like if we bought on earnings day at 40, then we would sell here high at 41.6, low is 38. It's only like a $2 move. So if we bought on, say, earnings day 11.6, then we should sell. But I can't see using the indicators that are telling us to sell. Momentum's already down. Here, it was already down in September. Maybe they were closing stores, they don't say, but beat the consensus of 29 cents. But sure enough, within 2 weeks on 11/19, then that's a Bollinger Bell sell, so about 1.75 SD on the positive side. But there's no golden cross from the slow stocks or death cross. Here the MACD is showing overbought maybe, but not really. It's right. It's at 0. Yeah, it's not even up here at 2 where it's where it's way too high. And the volume trading is kind of high. So that's showing support on. Anyway, that's what happened in 2012. So again, if you're holding position in equity, it works out quite well after the fourth quarter because then you can see this very large gain if we go to the next window. That's going up like 20%. So you definitely, it's still a good equity in 2012. Let's just go to the next winter quarter or third quarter and see what happened here. All right, much bigger deal here. We're looking here at this bottom out. This is the opportunity to buy in 2013. It looks like it happened. You should buy according to this. I'm using slow stocks for if I were to choose one indicator, that's what I'm saying, or I could use the MACD, but it doesn't look like it looks a little parallel, but it looks like slow stocks is better for this equity. So I'm using it mathematically. So if I were to weight it, I'd be like, okay, 80% slow stocks and maybe 20% MACD. If I'm like trying to vote yes or no, should I buy or when I should buy and sell, I would probably use the indicators like here when it's down here, it's telling me once this pink line crosses over going up and a golden crosses, it's telling me it's time to start buying, that there's going to be a large lift here. When it goes up to overbought, and then when I see a death cross, that could be my moment to sell. So that's all I'm saying here, is that's what I'm doing. But it looks like, see, as this isn't, there's no price movement. Looks like some news happened with this equity on October 14th of 2023, 2013. So you should buy, and it looks like it's trading at 44. Then, just following the slow stocks, do I have an annotator? Yeah, here's my annotator. So I'm looking at these moments, right? This is my trend line for. I'm looking here to here. Sorry, that's wrong pen thickness. I'm looking at the golden cross and the death cross. I'm looking there, and that correlates to this. And that's telling me that don't get greedy. Once we are at overbought, and we don't know, is it going to hold and go up for a few more dollars or not? But if I'm just using this one indicator, remember I'm saying it's matching very well the stocks. I'm using my slow stocks for my indicator for MACYS. This is just reviewing. Then the price went from, see, on November, on 11/25, I should sell, and wow, it went up $10 to 54 was a new high. So it went up $10. So that's $6 profit per share. This is $10 on 44. So like $11 is what? This 25%. So it's over 20% gain in that time window. But what I'm looking for is the earnings, and again, it beat earnings. So I'm just writing down 2013, it beat earnings. But if I'm looking to trade from earnings day forward, which is just the problem with my strategy, it looks like. So I should look at a bigger window than just earnings days. But if I were to trade on earnings day, there's this huge candle here. I would need to buy in the morning because it looks like it spiked in the morning, but then it kept momentum. It stayed up. But here's the problem. On this day, well, the slow stocks is saying there's even more price movement that's possible. But the Bollinger Bands are saying, well, it's near the selling point when it's up at this range. But it did go up. So let's say on the actual day of the report, if I bought at 51, there's not much more momentum. Again, 2 weeks later, I should be selling at 54, right? So that's just $3 gain for the equity. So maybe the better strategy is just use the slow stocks with a bigger time window around earnings day. All right, so just going to go back here a year just to see that one more time. This is 2012. 2012, it looked like if I bought on earnings day, the slow stock momentum was actually going down. So they had 2 more weeks of rising price, and then it fell, just like before. But, oops. So it looks like if I'm just trading at the highs, 42, and then the high here, 2 weeks later, that's nothing. Oh, because there's a big wick on this one. 41.98, 38 to 40. If I looking at the lows at 41.73, 39 to 42. So again, and this is 51 to 54. There's a $3 price action in a 2-week window. Exactly the same price jump there. There's a $3 gap in a $2 in a 2-week window. So in 14 days, it's a $3 change, and then it fell. So same thing, and then it went down. It went down for a while, but then it looks like same thing. If you wait after the holidays, and it looks like 2012, the next dip was, oh, that was the dip I was talking about. Then the next dip was buy on January 7th and sell. The next golden cross would be 325. And this is the follow-up. This is following up the third quarter. So this is the aftermath. So then here's January 7th. Boom. Oops. 36 to, here's the death cross here. 36 to 41 if I'm tracking the lows. 36 to 41, so that's a $5. That's the next bullish trend. And again, I'm just trading on the bullish side. I'm not even looking at the put side. But yeah, it looks like that's what's happening is there's a sell-off after earnings after 2 weeks. So if we sold here at 40 and bought some puts, waiting for it to bottom out, yeah, it goes down to 36, 40 to 36. So it's a $4 action down over the course of over the course of 6 weeks. So then going to just checking the trend, just see if this is a pattern that happens over and over every year. This is why I'm doing this video. So then if we look at third quarter that's first quarter, third quarter, it's going back to, it's taking a while, 2013. Again, see it went up 2 weeks. This is it, right? 2013, quarter per share on 11.12. 11.12. Then, like I said, 2 weeks later, it's spiking that huge candle here. We got like 3 white soldiers, but then this spike here, you got to sell at 54. And then it looks like, no, it held high. It didn't drop down below 54 again until months later. So not really a time to sell. It looks like it was a very good year. 2013 was even a better year for MACYS. Yeah. Okay. Yeah, let's keep going. And looks like you should really hold this equity. It had a really good year, even up through the summer. Look at that. There's a big run up to 62. Wow. Let's go to the next year. Again, it's brick and mortar store MACYS. And like many other companies that are being gobbled up by Amazon or Temu or these other giant or Walmart, these online retailers that are killing it on Black Friday and with international trade. Let's go to 2014 though. Go to 2014. Because the news is MACYS is the Midwestern stores. A lot of them are closing as well, or they're becoming warehouses, so you don't like walk into the store. But the wonderful thing about New York is we have the parade. Like I said, I'm just repeating myself, I know, but right down to Herald Square, and we have people shopping, physically shopping, and going to Midtown. One of their stops to get into the holiday spirit is MACYS. It's just a thing that we collectively do, right? A part of the American spirit. So let's go. Here's Veterans Day. In Asia, this is a Singles Day or Double 11's Day. But in America, we honor our veterans 11/11, 2024, earnings day. And again, I'm going before that to see when there's a dip, a buy dip. Here at Golden Cross, saying that it's bottoming out in it's time to buy at 56 on October 20th. So again, closer to the quarter, much closer to the quarter, 10/20 this year as in the previous year. And then you should buy at, say, 56. And then here's the following death cross at it's about 62, 56 to 62 on this date. All right, or I mean, because if you get skittish, you can just sell once it hits that top line, that 2 standard deviations above the moving average. That's when a lot of computers and algorithms as well. I mean, this is going back 10 years, so there were less computers doing it automatically, but they're automatic sales for a lot of, trading algorithms or quant programmers. But that's a $6 gain that happens on 11/24. So that's 1 month, holding it for 1 month. Then it goes up 10%, right? And then, but looking at the trading quarter, if you just waited on the trading quarter day, it spikes on the candle and you still buy, you're buying at just looking at 62, selling at 65. So again, like clockwork, that's $3 again that you're gaining on the share price. And then did it go down? Well, yeah, it does go down, but it only goes down for 2 weeks. And it doesn't break, and you can see that this indicator is much better. This isn't really, the MACD isn't telling us until here, this big sell-off. Wow. Which happened the following year in 2015. But momentum is still good. It's rising up to even hit the $70 price level in 2015. Wow. But that, just looking at this window, just ignoring the rest, like that's the action. If you wait for earnings day and buy, and that was on 11/11. Again, it looks like 2 or 3 weeks. 2 weeks. That's, yeah, November 24th. Again, a 14-day window, and it's gone up another $3. Okay, with a good quarter, with the positive earnings report, positive earnings share, it looks like, and a dividend was paid out. All right, let's go to the next year. Doing the same thing. We're into 2016. Wow, it looks like it's got smashed in the summer, and here it's bottomed out. Look at that. It's riding down the whole time. And here the MACD is confirming it, and the MACD is further saying that there was a downward and it's following. So after it hit here it's bottomed out for 2 or 3 weeks. Then it looks like that's a good second indicator for momentum. We can see there's no break. And look at the gap on that. Wow, the gap between on the MACD, and it doesn't confirm anything good until about here. But if you're not going to get back into MACYS until about here, wow. Yeah, see, this is a false narrative here. If you buy here, you're going to lose money for a couple of years. If you buy here at $60, it hasn't seen that price level in quite a while. But the following year, yeah, look, 2016 on 11/10. Yeah, this would have been a crushing year, 2015, following using this indicator. So I'm writing check for 3 years, but 2015 not good for this MACD indicator, because you have a false narrative. You have saying, okay, now it's time to buy here. Then you'd be buying at $59, right? So let's say we buy on the lows, right? 57.12 on this day, September 8th. Thinking, oh, okay, it's going to rise again for the holiday. And then, unfortunately, it does not. It tanked some more. So then you have to watch the other indicator. Look at that gap. You have them both saying, no, there's something going on with this company. They're closing stores, or it was not. I'll look up the news. 2015 looks like it was not a good year for MACYS. Because if you follow this and you're waiting for the opportunity, you're going to sell the next time the MACD death crosses like that. Then you bought at 57 and now you're selling at 45. So I'm just noting, I'm gonna put big question mark. 747 for you're down $12, minus 12 on that trend. Right? So that's the problem with just using one indicator. So if you're following that, you're like, okay, I'll buy here. I'll hold it until it's overbought and says to sell. But look, this secondary indicator is saying, no, there's a bad downward trend. And sure enough, it crosses back over to the positive side. But still, something was going on with this company, just looking back at the numbers. Maybe it was store closings, maybe too much Amazon. No, everyone's going to buy online. Like, no one wants to go to the stores anymore. Maybe, remember when you're reading the newspaper, they were closing 300 stores or something, or 100 of the stores around the country. So, and China was rising. This was 2015. So not a good year for just using the slow stochastic. Looking at the quarter itself, same thing it looks like. If we buy on the low at 39 on the earnings report, 56 cents per share, then we wait 2 weeks again or 3 weeks. But there's nothing showing in the slow stocks that we should sell. It's low. If you buy on that date, see, it's still low. And we waited for the trend. Oh. And we sold on the death cross, then we're at 46, right? Yeah, 45. And we're up $6, but the time window is you have to hold it till March 14th. Wow, to do that. So September to 5/14. 314. Again, you get a positive result. It's buying on earnings day, selling at the next death cross, overbought with slow stocks. And but the MACD is saying to hold it here, but then it didn't, and then the gap closed and it broke as well. It's lagging. It's totally lagging because the slow stocks is tracking it quite well. All right, so you got to watch out for company news. Something obviously happened in 2015. Let's keep going. Let's move ahead. 2000. Wait, why isn't this in the picture? 2016. Wait, how do I move the price up? Wait a minute. Why can't I move the price window? 2017? No, I skipped a year. Where's 2016? Wait, why can't I see it? I want to move the price. Oh, like that? Ugh, how do I scale this right? No. Yeah, it looks like it never saw 70 again. Can we do this logarithmically? How do we fix the window? Oh man. Now it's screwed up. All right, what am I going to do about 2016? That's 2015. All right, here's for third quarter 2016. No, no. 2017. What? 2000. This is wrong. Yeah, 2016. This is a third quarter 2016. All right, so how do I do that? No, I want to. I want to. Where are the earnings? Oh, 10 year studies. Oh, there they go. I closed a couple other windows. All right, 2000 and yeah, we're definitely at a $70 level after that. So how can I change that? How can I do that? I want to do that, but I want to do this. I want to go down. I want to see the zero. All right, whatever. Now can I I do this, right? Plus. And now I'm scrolling left. See, why didn't it autocorrect? See, it autocorrects here, but it didn't do that before. All right, whatever. I needed the zero line, I think. I think somehow I got the $0 line out because you can't go below zeros with the stock market. So it didn't scale. It didn't scale. It wasn't scaling the y-axis. Anyway, back to analysis here. So here looking at 2000 nope, 17, 16, 2016, nope. Yeah, looking at 2016, 11/9 would be the date. And here the surprise percent was 58% below, so this was not good. Surprise percent, I don't know why it's saying it's positive, because it was beat the consensus of 41. See, that's wrong. because it was 17. So it did not beat it. It lost, but it still spiked up. Wow. But again, using the slow stop stochastics, it looks like you should buy here way earlier than holiday season. Buy on May 23rd. 523 was the next major pull up. And then my sell, just using bullish slow stochastics, would be, oops, I don't want to undo. There it is. Excuse me. Still not doing it right. Ugh, lost the earnings again. So frustrating. Maybe I'll give it 15 seconds and it'll put the data on. Plus some other windows. Crazy lagging. Wow, 1961. Page. Sorry, I thought I had a good computer here. Hello. This page is still not responding. And we're back. Right. So I'm going to go back to 2016. Open the year up. And back testing in the third quarter. December 12th, dividend. 11/9/2016. Okay, and this looks like I don't want to see the weekly. Yes. Here we are. Open the year up. There it is. Yeah. Yeah, like I was saying, looks like May 23rd. Okay, just using this one indicator and big spike and 2-week window, went up above 2 standard deviations. Same pattern. This one, 2015, totally broke from my metrics. So my losing year so far, not following this pattern, has been 1 year out of 5. So this is the 4th out of 5 where it followed the right trend. You buy on the quarter date, 11/9. Anytime the price looks good on that day. Here, let's look at the high is 42, right? Doesn't matter, just estimating. Then wait 2 weeks. It crosses the Bollinger Band, 2 standard deviations below. We'll be selling at the high at 45.4. So again, that's a $3 jump. Precisely 2 weeks later on the 21st. Should I have sold? Yes or no? Remember a couple of years it trended up again? It's like the answer here is a resounding yes, because as we went to December, the money, and after the Thanksgiving parade is over, it moved to, again, Magnificent Seven stocks. There's a sector rotation, right? It moves to the tech stock rotation because Cyber Monday, because that's the way people shop, right? You're going to get Johnny and Mary, the new cell phone, the latest, greatest Apple or Samsung, you're going to get a new computer or the newest video game console, and those stocks, so money will move to those stocks, right? So it did cause a big drop right after. If we follow that trend on the cross here on November 28th, sorry, November 21st, then it crosses down. Then you would, if you had options, if you had put options, it bottoms out here and crosses back up at about 28, right? So 42 to 28. Wow. By the new year. So it's 11/21. So the rotation really, big sell on the rotation, not bullish at all. Wow. Okay. So also looking for patterns like that. All right. So I'm just looking at the third quarter pattern, like I said. Let's go to the next year. So that's 4 out of 5 years where it followed that sort of pattern. All right. So again, we're looking at the third quarter. Wow. Again, a rough year for MACYS, it looks like. The stock is now was trading, remember, at $50, $60 for a few years, is trading much lower. But I forgot to do the pre-quarter trend here. That was in May. May was the low? What was the low? Was May, right? 2016, May 23rd, I believe. Then let's say you're buying at 31. And then just following the trend, here's the point there you should sell. And you should sell at about 38. So that's a $7 rise. So again, that's 4 out of 5 years where there's a good, using this stochastic, the time to buy was much earlier. It was in May. Maybe it's a recovery year. It was July, October. 2015, all the metrics got smashed using these algorithms, these metrics, these measurements to track the stock. Slow stock did not work in 2015. So we'll talk about MACD. All right. So then this is one of my safe settings. And so then it worked again 4 out of 5 years, but it came much earlier in this sort of recovery year. And then the sell on 38 was August 22nd. Setting up for the fall. We're back in school. And if I just wait until earnings day for the third quarter, November, again, a $3 jump. So that's 4 out of 5 years where it jumped $3. In the one where I had to wait for $6.39, that's because right after that date it fell. And then it took you have to hold that equity for 3 months and it would go up. But here in 2018, if you bought it, the trend, it fell down to 45. So that was a horrible year for MACYS stockholders. So now it's trading in the $30 range. It looks like $30 to $40 range. And the news isn't, and it's getting worse. There's no stock splits. And now it's trading in the $20 range. The following year, we're in 2017, right? 11/9/2016. Let's go to 2017. It's trading down into the 30s, into the $30 range. So let's go ahead another year. It's opening up. You can see here, it's at its year low. It looks like when it came to third quarter. So here's 2017. Interesting. So it looks like here it crossed to the positive on earnings day. Is that right? 11/7. Third quarter earnings. Yeah. So November 6th. Turns out that that is also the low. Turns out that if you do the one before that, the last low before that, this trend, it was trading at $29 and it's not hitting that level again, but you should probably buy here at this ultimate low, this crossover. So now it's trading at 19 on 8/21. And then if you held that, then we're looking for this first sell opportunity would be, you'd have to hold till December 12/18, but you could sell at about 25. Okay, so that's a $6 rise. But again, sort of like the previous year, there's a much bigger time gap. That's a 4-month time gap you have to hold. Another one was 3 months to hold and get a $7 gain. All right, so now 11.6 is the buy point, and huge spike 3, 4, 4, 5 days. Here, this is telling us to hold and sell here on December 18th, 11.6 to 12.18, so much longer hold. But a huge rise. The stock has been trading, used to trade much higher. Again, 25. But on 11.6, 17, that's an $8 rise. So a whole different story 2 years after that recovery year. But the stock's trading at half its level. It's not trading in the 30s and 40s anymore. And it really hasn't since. After that, it rose back up. So it did rise back up to the $40 level. Here. So then, yeah, 2 years after 2015 and the big fall in 2016, it's been volatile, but it rose back up to 40, trading the $40 range for a few months. Let's go to the next opportunity. Here, this is the third quarter report for 2018. 27 earnings per share and a huge red candle on that day. That was 2018. 11, 12. But again, just using the metrics when you should buy and sell, using these indicators. And again, picking the slowest stochastics. It looks like here, this would be the date that I would buy. It's down at the bottom, but there's a positive trend. So that was 10/22. The earnings date was 11/12 this year, so a couple weeks before the earnings date. And then, according to this, it never reached overbought. So you get the feeling after 2-3 weeks that it's going to go up to 8, that it's going to cross, that there's nothing holding it back. But something actually did. The holiday season, again, was bad for this brick and mortar company in 2019 because it fizzled out. And the price dropped down to the $10 level, $15, down to 15. So just, again, big question mark. How do you handle this price activity? Another huge blow to MACYS in, I'm putting X here on 2018. 2015, 2018. So if you bought on 10/22, word to the wise, you should have sold on 11/12. 38 is the high, and here from 33, that's a $5 gain. So at the first opportunity, when there's a jump, like, don't hold it, thinking that it's gonna. Look at the MACD. The MACD is not confirming that we have a good stock here. There's a small bump gap, but it didn't cross over. It's still down below. So there's still the divergence is at 0.39 but that's it. And then it opened up again. So showing, confirming that there is a downward trend here, just like in 2015, right? And this is a false positive. This is a false cross because look at how the price got crushed. All right, so we have to wait a year. So then what's going on the next year? 2019. So now we're going on to the 2019 window. And it was on 11/20. So 2 bad years. Oops. So 11/13, if we bought here, the low, and we wait, there's just no activity, then 31. Then again, we had to understand that we had to sell right away. How are you supposed to know that? So I'm Xing this year for this indicator. 12, you got to sell by 12/3, and it rotated out super fast. I guess they're international sales too, and just no one wants it, It's $1 gain. So I'm saying in terms of analyzing this stock, this is don't use your slow stock in MACD. Look at the volume trade here. These big red candle sells. So now we're up to 2020. Oh, I skipped 2019. Up to 2019, third quarter. Okay, again, positive, 7 cents per share positive, okay. So again, this iconic brick and mortar store you can see here is trading near its low. We use the same this is the trading strategy, 2019, with a very reliable mean reverse indicator using our MACD. Again, old school type analysis. We would buy on 826. This would be the opportunity to where it's low and there's a good cross. Hold, waiting for it to cross over here to like overbought and sell here. Looks like we'd sell on January 6th. So it's using the basic strategies of trading. On August 26th, we would buy at, doesn't matter, 14.2. And then sell at 17.2. That's $3 again. Exactly $3 again. How many years has it been $3? Oh no. That's not the trading. No, that's not the earnings day strategy. Buy on earnings day. Just checking momentum. It's good. And then selling here. Let's see. I don't know what the price action is. So again, wow, trading at much lower. So this is 11.18. Have to buy on earnings day. Say we buy at 14.3. Then here's the opportunity where we would sell. And we're selling at 17.2. Again, exactly $3. We're holding it until that opportunity in the new year. So now the indicator is working again. So there's a yes here for 2019. So 1, 2, 3, 4, 5, 6 out of 8 years, this basic trading algorithm works. 6 out of 8 years, it's reliable. Okay, so let's go to the next year. Again, I'm looking for basic strategies using just a single indicator, 2 indicators, and the price action here. And I'm looking for this opportunity here. We're going to exit out of this lull. And notice that it's excellent momentum indicator because once it broke out, if we bought on May 26th of this year, this pre-quarter, that would be the time to buy, 526 in 2020. And we would buy at, the stock is trading at $5.50. And then hold it until the next appropriate sale, which is here. And that would be, you'd have to hold it for 6 months, 7 months. December 7th, the day that will live in infamy, say all my old professors. Pearl Harbor Day. Sell at 10.94. It's a $5 gain. So you double your money. Wow. Let's look at what happened on actual trading day. 11.18, if we bought on 11.18, there's a low of 742, and it spiked. And then if you sell what you're supposed to on December 7th, 11.18, the next available opportunity. Look at this big spike here. Bam, it went up to 22 briefly. But that's showing that they want to save this American iconic store. But the metrics, this metric is saying hold, hold, hold. This metric is saying overbought. But yeah, it looks like if you held for that year, it was another recovery year. 2020, you should definitely hold this stock. Who was president in 2020? It was Donald Trump. So let's look at the transition team. Donald Trump was president in 2017. Yeah, Obama left office. 2017 was good for this strategy, this classic strategy. 2018 I got crushed. 2019 no good. 2020 again, he is a sort of a bullish catalyst, a mean reverse bullish side catalyst. And sure enough, in 2020, his fourth year of his first term. Again, thank you from the stock market and just traditional American companies. 742 you buy, and then again sell. Wait, hold on. And then selling at the appropriate moment. December 7th, 10.94. Again, exactly $3. Amazing. Absolutely amazing. So just again using this strategy and this classic math, Just choosing my slow stochastic following with the MACD for my indicators. Looking at the volume, I gotta remember what I was talking about with volume when I did volume analysis. And using the Bollinger Bands for confirmation. So these are really my 1, 2, 3 here for this basic analysis, classic math. But pivoting around the time frames of the third quarter reports, getting $3 every single time except for 2 years. No, 3 years. I'm getting up $3. What I'm saying is, if you buy on earnings day, it goes up $3. 1, 2, 3, 4, 5, 6 times. Went up $6, went up $8, went up $1 within that time frame. When then the next time the indicators say it's time, the slow stock says it's time for you to sell, and it's confirmed with the Bollinger Band, then you're making a quick $3. But it's always $3, whether it's a $60 stock, $50 stock, or here it's a $5 stock, $10 stock. It's a penny stock. All right, let's go to 2021. Again, he's saving classic American companies. Miracle on 34th Street is happening again. Let's go to 2021. So is this November? All right, not a good year for me. No. Look at what was trading at 30 again. All right, so let's see what's happening in 2021. It looks like the opportunity again came very early in 2021. Or in 20, wait, it's third quarter, right? And then sell. So the next opportunity, it didn't really come until here. Here, this is mad low, and this is a crazy spike. So it looks like looking at the oversold, and it didn't hit the 20 level, but at 30, that's very low as well. Looks like we've been down for so long, there's got to be a catalyst here. You should buy July 26th. And then according to the overbought, the first selling opportunity is here on the 830. If you did that strategy, again, just following this indicator, you bought at 16.5, you're selling at, just hold it for a few weeks, we're selling at 21.5. So it's a $5 gain again. Again, showing mean reversion, it's showing that this company is still important to Wall Street, to the American consumer. I got to check it. Is Macy's a Fortune 500 company? I don't even know if it's on the list anymore because it's been down for so long. Is Macy's S&P 500 company? Because those companies are often saved in bailed out. Oh, so the S&P is to be, Macy's to be removed from the S&P 500. It is going to be downgraded. No. This finally turned the corner. On April 2020, Macy's was dropped from the S&P 500. Oops. It's not back? Larger companies deemed the rating agencies representative of overall U.S. sentiment. So Macy's was removed in 2020. I'm going to write that down. No longer. It was trading at the penny stock level. Yeah. When it dropped below $10, it was no longer S&P 500 worthy. That makes sense. That was 5 years ago, guys. All right. Anyway, let's keep going. I didn't read that news, so I needed to do this research. Okay, third quarter on 11/17 though, so then that would be our moment down 30%. Obviously they're trying to do something for this company. Keep it going. Earnings was on 11/17. If you bought 11/17, bought at $30, it went down right away. Look, you can see that there's a problem here, that it's overbought. So you have to be quite cautious. You should definitely sell. Bollinger Band is telling you to sell, and a death cross here. The following day, don't make any money. So 11/22 you should sell according to the metrics because it went way down. So this is breaking from tradition in 2021. How sad. All right, but then you should buy a whole bunch of friggin' puts. It's no longer in the S&P 500. buy put options. It's trading at let's say a high of 35 puts. It's trading at 35.85. And then just following until it bottoms out here. Here's crashing, crashing, crashing. And then if you did this strategy, and then it's going to drop to 30.27, 60, 85, 27, 85. So it drops $8 drop. And what's the time frame on that? And then you should buy puts until 27. So that was November 22nd, 12, 1. So for about 14 weeks, price is dropping going down. And then the law of mean reversion, again, it's again a company. It's probably they're trying to get tax breaks, they're trying to downsize. New management. I remember reading about the new management and the management shifts that are going on. And the administration's changed. It's 2021. Trump is no longer president. Trump did not win the second term. And president of the United States was Joe Biden, right? Who was the vice president under Obama, who's our Democrat. And we had our first Asian American mixed female vice president, Miss Kamala Harris, Debbie Harris. I think is she Punjabi? Is she? She's first female. She's a mix of African American. She went to Howard, which is Black College, Hastings, and Alameda College. Okay, blah blah blah. She was junior senator, South Asian. See her early life. Her mother, Shamaya Gopalapan, was Tamil Brahmin class. So that's the priestly class, I believe. In United States from India, 1958. So above the merchant class, the scholars class or priestly class. Yeah, Severina to run graduate school in endocrinology. She's an endocrinology. Are you kidding me? 40 years follow, blah, blah, blah. Purchased a receptor and advanced breast cancer research. Wonderful. My mom died of breast cancer. Her father, Donald J. Harris, is Afro Jamaican. First biological just and it's Kamala's parents' band. And yeah, it's wonderful. Good for them. All right, so yeah, it was the Biden and Harris presidency. And again, also proud Americans trying to improve American way of life, obviously, and voted in by the American people. There was the tragedy of Epiphany Day, the January 6th riots, the Capitol, and we're into 2021. 2021. So 2021 was also an off year for this $3 thing. So have I done 10 years right? 1, 2, 3, 4, 5, 6, 7. That's 10 years. So following this $3 trend thing, 7 out of 10. So this analysis for MACYS has worked 7 years out of 10. We need market stability. We need financial markets. We need people moderately happy. And this basic analysis still works for the MACYS company. Let's see if that's still true, because I set this up to track S&P 500 companies when I was doing my quant research. So maybe it won't work for the upcoming years because they're no longer. I have to switch companies. Maybe MACYS is a loser. It's 24, but 3 more years to go. MACYS will MACYS return to S&P 500? Will MACYS return to SP 500? Let's see if anyone's written an article like that. MACYS has been removed from the S&P 500. It was replaced by Carrier Global. The change was a significant shift in Macy's status as a major retailer. The company has faced numerous challenges, including store closures and declining sales, which being more representative of a small cap. Oh no. September 4th, stores 125 stores drive a surprising growth this year in Macy's. And Macy's rejected a buyout officer from Ark House and Bridgebridge Capital for its bold new chapter strategy. Macy's may make a full concerning strongest growth after 3 years. Oh, so there is a lot of bullish news here. Soared 20%. All right, year-on-year changes have been down 25%. The Reimagine 125 stores. Sales growth not delivered, not close to the numbers with TJX and other Walmart and other competitors. Okay, that makes sense. All right, so yeah, I'm still being the New Yorker, watching television all year. I'm sticking with it, guys. All right, let's go to 2022. So 2022, it looks like February you should buy, but looking at the price action, you should sell right away here. In March, it's like a $3 shift. But looking at this drop here, the next moment you should buy, second quarter earnings. This is where you should buy in third quarter earnings. Looks like it's following the 2-week trend again. I'm happy about that. So let's look at that analysis first. On 11/14, you should buy on earnings day. Hold it for 2 weeks is what I'm saying. It looks like 1943. 2 weeks later, it hits the Bollinger Band. 2 standard deviations above, and you should sell at for exactly a $3 gain, as it was. And that is November 28th, 2 weeks later. So again, this is another year where it's following what I said, and then buy some puts because it's going to drop as there's a sector market shift. And then, right, you see what I'm saying? Wait for it to bottom out. And then it's trading back down at 15 on June. You should know May 22nd, and then cross back up. So then 5/22. So buy puts 11/28. Sell your Macy's calls, or just sell short. Sell your position short, and hold it that way. Make some money until May. It looks like. Wow. All right. So let's go back to 11/16. Wait, I had the wrong date down. I was swinging 16 and because the 18, the candle is the 14th. So 16. Sell on the 28th. All right, let's see. Let's look previous to this run up, according to slow stocks and according to here. Here, there's closure, so it's confirming that there's going to be a bullish run soon. But I'm looking at a golden cross like here or here by here, and that's not good. But let's call this a double top. Maybe the next time I would probably buy here then. So let's say you bought on July 25th. Like, okay, now, you're trying to get the car started again, that kind of analogy. On the 25th, you could buy at about 17, and then selling, once it's overbought, selling here, you could sell at 22. Again, that's back to $6, so it's just like the other years. Wow, with the $3. It's between $6 and $10 gains. 6, 7, 6, 7, 5, 6, 7, 8, 10. 3, 5. These are the years where what I'm saying, where the indicators work, where the analysis works with this stock. So 2022, let's see. No, but it's Biden Harris. It's working again. So this is working for this stock, and it's not S&P 500 anymore. So it didn't work for the first year. It was dropped from the S&P 500. Now it's working. So it's 1 out of 2 years since it was dropped from the S&P 500. I'm make that as an important timeline for Macy's. Let's go to the next year. 2023. Okay. So here's third quarter on 11/15. And buying on that date, we would buy at three, let's say, by the open. Then following the crossover, and see how way above that wick. These wicks are way above the 2SD. Again, just using basic math algorithms is now the time to sell. We'd be selling, wow, at 1992. So that's huge gain. Again, trying to save this stock, this company apparently, on December 18th before Christmas, 12/1/18. Again, sector rotating out. Looks like it's overbought, and if we did that, selling at 1992, it's a $9 gain. So it's triple. Then we're going to watch it plummet to, again, using this as our indicator, the oversold. Then, that's not too bad, actually. So, 1817. Oh. 1994. Here's where you would. Big gap. Crossing back over. 1827. It's only $1. But that would be the move. It's $2. 1992. It would be here. No, it's $1. Well, 1717. Yeah, it's $1. It's $1 drop. And that was 6 months hold. 6/24/24. All right, but then here's our opportunity to buy again. But again, huge price drops. But again, we don't, because look, there's a gap here, and the gap is widening, showing that things are not looking good for the company until about here, where there's confirmation that there's some recovery possible. So again, when it's this bad, when the price is this crazy, you don't wanna buy even here. Look, you could make a few bucks, but you can't, because the MACD, look at this 3 months performance, sucks ass. About here, that gap is opening, and this one is closed. Buy here. That'll be my next buy possibility using these metrics, right? Or wait till it actually crosses up for a short run. Or here, double confirmation, right? So here, if it's that bad, the next opportunity, double confirmation, is before the before the earnings. It is looking bad for this company. I have to want to use double confirmation before I'm going to invest. So that would be Veterans Day last year, 2024, 11/11. And then it's showing me that it's tapping out here, right? Here even, but there's the death cross. But then it held for one more. Boom. At Christmas. So again, same idea. 2 weeks later, 12/23. If we bought on 12/10, sold on 12/23, 2 days before Christmas, as it rotates out. Same thing happened. It fizzled out again. But use the high price here. The high price here. That's not looking good, because that's $1. It was $9 here before. And a lot of these are not the metrics for this company's getting crushed. It's not the same mean reverse pattern. All right, now I'm a little scared about if I should rotate my money out of this. Ugh. All right, look at this great action though here in wanting to save the company in 2023. Again, what was my point? Leading up to an opportunity, I want this to close, and I want confirmation that there's some momentum. That's kind of a wide gap, and this is narrowing, so maybe there would be the buy-in. 620 in 2023, 620. And then the sell is boom here. It's a death cross. It's only $1. That would be in August. Oh, was selling me to sell, and then the next opportunity buying on the date really worked. This one $9, really trying to save this company. Looks like as American value, American sentiment, good American sentiment. Oh boy, let's go back to 2022. I didn't do this right. It's just, the world is changing, right? So this one was by here. I said July 18th at Golden Cross. This is closing, so it's confirming something good is gonna happen. Then sell at 22. Where is it? 22. Oh, here. That was December 5th. Right. And that would work. It was a $6 gain. Do I have something like that in 2024 that happened for this company? Look at this big sale. Someone sold 126,000 shares, but then it was trending down. It doesn't, we don't know if they're put options. Someone else sold 160,000 sale, 126,000 shares. Oh, they exercised the options into shares and then sold half the position. They exercised options and then sold about half the position. Someone's doing that. And that's strange if they shorted it and then the price went up. Just maybe we're for a catalyst for the company. I don't know why you would do that. It's widening, yes, but this is if it's still a mean reverse company, it's going to go up. Who did that this year? I've got to check the insider trade. It happened in March. But if the sentiment is that bad and then it reversed, maybe someone was fired or something and they were just cashing out for their retirement. I don't know. That's a lot of money. Because even if it's still trading at say $10, that's 1,267,000. That's $1 million retirement right there. That's another $1 million retirement. 74,000. 740,000. That's $740,000 of $1 million retirement right there. Amazing. Amazing amount of money that these officers are getting. Anyway, let's go back to financial officers. And let's go back to 2024 when it was 12.10 and 12.23. It went up $1. But let's go back to 11.11. And see, it's been down, down, and it's being crushed. And that's the first opportunity, like I was saying, for positive trend, 11.11. And 12.23. It's like $1. So it looks broken again, so that's $1 change. So it depends on what's going on here. We've had a huge run up, but it's pulled back again. Let's look at this was the opportunity after these two officers took their $1 million retirements on that. That's $2 million right there. The stock is trading down the low penny stock again, 976. Was down in the 8s and 9s for a while, it looks like again. Here. It's low, no, 11, 10, 11 and $10 trading in $11 to $10 range. So there was the opportunity to buy, and that would have been April 7th of this year. You bought, which I did, and I bought it at about 10. So I did this right this year. And now it's been up $8 per share. I'm up like $800 on for per 100 or whatever. So then, yeah, that was the time to buy. It was April 7th. Let's take the low here, 976. And then if we follow the trend to overbought, this would be the sell. This is where I should have sold at 1766, 76. So that's what 9 plus 8 is 17. It's an $8. Yeah, like I said, $8 gain. And it looks like the opportunity to sell was around 911, 98. So now we're back to a confirmation year. Pre, right? But it's a much bigger gap. That's a 5-month gap. Those other spikes in prices showing mean reversal momentum usually happen in a contracted time frame between 1 and 2 months. That shows that the company is solid and S&P worthy. Is that the reversal, which follows slow stochastics, is going to happen within a month or two. You're going to get your money back. This if there's bad news or shame on this company or they tax evasion or they're bad officers or a Ponzi scheme hit this company or something. Within 2 months, once the metrics hit, they're like, okay, we solved it now. The criminals are in jail. Let's go. Usually, it's between 1 and 2 months if it's S&P level country because business is business, and they want to. They're like, our reputation is important because it's a global community. Otherwise, they'll invest in China or they'll invest in Russia or whatever, right? Or in other countries if you can't get your shit together, So the release of these Epstein files again is bad for Americans look like idiots, in the international scene. But looking at the trends, for what did I say? When earnings day comes, again, look at this spike here and the activity and the excitement for the holidays. It's in an overbought range right now, but it's been this way since September, for 9/11. It's still being pushed up. How long does it ever stay that way for more than 2-3 months? Like I might want to on the next available opportunity. Let's look this October 3rd to that's 3 months. Quarter to quarter, so that's 3 months. Does it ever say up like that for more than 3 months? Because I'm looking at this. Here's 3 months. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So yeah, so after the quarterly report, hoping that if it's following this analysis, which is worked for, hold on just a second. That was a good year. That was an off year. So I've now analyzed. That's the thing. 1, 2. It's been 2 and since it was dropped from the S&P 500. This mathematical analysis has worked only 2 out of 4 years. So it did not, once it was dropped, the math metrics changed. So you're using the wrong, because it was dropped from the S&P 500. You should have just bought protective puts for everything, right? But then the following year's recovery, it's following the math of like a good S&P 500 company. And then last year, it did not again. But counting it for these years since 2012, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 years back tested. This 13-year review. And this is the 14th year, by the way, 2025. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, this will be year 14. I'm going to have to either short the position or protect the position in any MACYS stock that I have right after the quarter, within 2 weeks. Because if you look at the history of this company, and it's no longer an S&P 500 company, this might be another year where, yes, we want America to put its good foot forward, and we have this sort of bullish catalyst president here. Maybe $22. I mean, I'll look at the analysis next, but where can it go in the next month? This is a pivotal month. So we're going to look at the target prices, but I would, after the report comes in, hopefully they'll beat whatever the estimates are on Wall Street. It'll do the same thing. What did it do when it was an S&P 500 company? Almost like clockwork, it went up $3. It did that 1, 2, 3, 4, 5, 6, 7 years on Q3. . And then 6, 8, 9, 3 years, it went up between $6 and $9. So that's 10 years. And then on the quarter. And then during the bad years, 1, 2, 3, 4 bad years. Like it went up. And then $1, $0, $1. So there's one bad year. It was still an S&P 500 company. Whatever happened to Macy's in 2015, the transition with Amazon or maybe Walmart or some of the other giants in the mall industry and brick and mortars, 2015 was a horrible year for Macy's. This mathematical analysis didn't work at all. But as of right now, but with a large time gap, so I'm looking for a large time gap. No, those are 1 month, 1 month. There's a 3-month gap. This is a 5-month gap, guys, for that $8 growth spurt. This is a different year than the other, well, 8 to 12. 2017, again, it's like it's being pumped up, like with a basketball being pumped up with an air pump. And it looks like it's gonna pump up the behavior, the mathematical behavior. And this is my prediction for this year is most like 2017. Was Trump president in 2017? I don't remember. Oh, maybe I should do that because this is now Trump is back as president 2024. It's year 6. So Biden 21, 2, 3, 4. So yeah, 2017. So he's lagging behind now. So this is a year for the president to again disproving his enemies, so to speak, his political enemies, trying to pump the market. And now, and there's been a big pullback since the end of the government shutdown, 43-day shutdown, and we have a Democratic Socialist mayor in New York, and I think he just wants to have a really bullish end of the year to confirm that he's working on his international diplomacy skills. He's working on infrastructure skills, bringing American factories and jobs as he's been promising for 6 years now as president. And we'll see how it goes, right? But I'm going to predict $22 to $23, and then I would protect any position, no higher. But there's a bull run here going similar to 2017. So again, if I'm looking at the years, that's what comes to mind. Again, and this is without a computer analysis, without any crunching the numbers, back testing. But looking at the trends here, it's most like 2017. Let's look at that year one more time as we close this visual back test, just to help people if they've never done this type of math before. So here's the third quarter analysis. But we want to see the run up. So where's my annotator? So what I'm saying here is, if I'm going to mark it, in 2017, it was at the bottom of the Bollinger Band, which is tracking the price over time, the moving average. Here, we're already doing this with the price action, but it looks like when we have earnings that he wants it to be a good holiday for the stock market. So we might see it rise a little bit more. But as you can see here, it's not the same. As in 2017, we weren't entering the earnings at the low part of the bandwidth, we were entering at the high. But mathematically, that's the way it's working out. That's the earlier part of the year. So when did it do that? So we're like here. But is there going to be a drop and then a big spike after earnings? It's so frustrating. I was saying 2017 and it's not following the mathematical pattern at all. See, it's down here, and then when earnings happened, it was a good 2 months after that, a good 2 months until the new year. People are selling their gift cards. Then Martin Luther King Jr. holiday is coming on, and then there was a dip. It was good again, but a big recovery year, 2017. Look at this growth here from a $17 stock to 37. I don't see that happening again, but maybe that's what they want to do with Macy's. Maybe I'm wrong. Maybe that's what that is what is wanted. All right. Again, it's down, but it's Christmas is coming early here this year. So let's go to the analyst research and see the target prices. I haven't been looking at this. I haven't been doing any financials. No. So the average price target is that it's going down in the next months. 6 months track record is excellent. Fundamentals are still positive. 10 have it as a hold. Strong buy. Only one underperform for those analysts that are actually tracking this metric on this website. 1918 is the price target. Wow, for 12 months. Oh no. And it's no longer an S&P 500 company. So notice that here, these analysts, there's only 13 that are really tracking it. And fundamentally, they're saying it's a sell now. Market is just keep it long. Because who knows? It's one of these America Great Again companies, though. And it's, you're going to see it on television. You're going to see Santa in front of the Macy's store on Thanksgiving. Maybe that's it. Maybe that's the show. So with this in mind and looking at this, I did my own analysis. Last 3 months, see up 50%, beating the S&P 500, smashing it 28%. What can I tell you? Really have to watch it. You have to watch it. I would, if you have any position in Macy's, after the earnings report, which I think is in early December. Let's go to the snapshot. I would be extremely cautious moving forward for the next 3 months. Next earnings date is December 3rd. December 3rd, so it's after Thanksgiving. But it looks like a run up even now. Yeah, Christmas came early. And that's a Singles Day joke, I think, though, this year. And there's a lot more Santa in the store already. Ugh. But the earnings date is late. It's been usually it's in early, it's in mid-November, second week in November, so it's 2 weeks later than usual. But before Christmas, it's going to sector rotate out. It might drop down to, like these analysts are saying, $15, $16. Unless Macy's is really doing something with their ad blitz or their holiday blitz. Again, I'm not in agreement with that low estimate. Maybe within a year. So, yeah, definitely after the new year, I'd be super cautious with this stock then. And reading about store closings and stuff. The 10-day volume average is much higher, so there's a lot of interest in it because of the price momentum. It has peaked. It did peak on 2 weeks ago at 21.25. I can see it breaking that. I can see it going to 22.23, and then proceed with caution. So after 100 minutes of rambling about this and reflecting on Macy's, which again I was recommending to families weeks ago as a stock to purchase before Christmas, I'm not seeing a good year next year now. Just thinking about its 5th year off the S&P 500, and it's not back. But I'd like to see the stock hit back up above 30, like S&P 500. It says 125 stores have surprising growth. Let's look at this article, September 4th. Assessing valuation after the recent surge. So here's another good. Remember, yeah, if you're tracking an equity, make sure you follow these 90-day share prices topped 51%. Are they under new ownership? They weren't bought out, right? So I'm gonna stop talking and let's listen.
SM shares have seen some recent movement, piquing investor attention as the company NAV. The last delivered a total shareholder return of 35.5%, with momentum building lately as its 90-day share price return topped 51%. Recent gains indicate renewed optimism, especially as the company continues navigating broader industry shifts and evolving consumer sentiment.
If Macy's rebound has you thinking about your playbook, it could be the perfect moment to broaden your horizons on fast-moving stocks. Popular narrative is 21% undervalued now, but that's bullshit. Look, each of the analysts are saying the opposite. Oh, because they own real estate, and if they're transitioning to warehouses like Amazon, though, as you know, their electronic purchases, and you don't need salesmen and saleswomen on the floor anymore. You don't have a brick and mortar store where you're paying rent. You're paying, $100,000 a month rent or whatever. $1 million a month rent for a flagship store. We're transitioning to good visuals, and that this is an American company, a 100-year American company. Fair value, someone is saying, one of the analysts is saying 24. Again, I'm looking at 20, to be cautious, at 22, 23. Can we read this? So this article is saying 24.43.
Key to find out why this valuation is so much higher than today's market price? The secret is a controversial blend of margin assumptions and cautious revenue growth. What happens if retail heat?
So it says Mace. The trick is, and again, we have a president who is a real estate sort of traditional, very conservative American, knows how moves work in real estate. They will raise $600 to $750 million from their real estate sales, because they have estate sales, over the next 3 years. So they're going to get 600 million to 75 million based on the money that they have. It's funny, right? So, however, Macy's faces ongoing challenges in store closures as well as persistent downward trends in sales and profit margins, which should quickly shift investor sentiment. Find out about key risks in the Macy's narrative. Another view, earnings says price to earnings ratio of 10.6, below the industry average of 19.4, but below the peer group average of 22.7. So on fair ratio, this suggests room for sentiment to shift to investors begin evaluating Macy's more in line with peers. Potential turnaround strengths that does this gap real upside price to earning P ratio. Simply Wall Street bullish. All right, so that is a contribution to the narrative, is that their business plan that they've revealed is that they just have so many malls, right? So they can just flip their malls, sell their brick and mortars, turn them into warehouses, have robotic staffs, and have, and then put their money into like delivery staff like Amazon does. Like I would, Amazon looks like they're following that sort of plan. Then you have computer programmers and other people who can be the storefront itself, and you can have, your telemarketers online. You can get those part-time jobs just supporting Macy's, just like you do Amazon with the other big companies. But I do think they want to keep some of their flagship stores in the major cities open. It's a good storefront, and it's part of the holiday spirit, and actually physically being shopping and being a part of that spirit, like watching the tree in Rockefeller Center and then walking down to Macy's, or doing the shops at Rockefeller Center, going to St. Patrick's, or going to Gucci or whatever, or Victoria's Secret, or walking along Fifth Avenue for a little while, as part of a middle to upper class experience among tourists as well from other countries in Europe and Asia. They want that experience of the holidays. So that is still going on in the United States, is making the city cleaner for the upcoming, tourists who want to visit New York, go to a Broadway show, and then, go home. Bring the kids to New York, see the Statue of Liberty, see the Memorial Tower, so there that still is sort of New York here. Wow. All right, being a New Yorker and just thinking of Macy's as being seminal to the holidays. I mean, for a while when I was working at a courier, I noticed that downtown just they improved the streets and cleaned it up so much for tourists by the museums and by the waterfront to make it a more wonderful experience to eat at a restaurant by the water or go to a job or go to these nice buildings down by the waterfronts on the east and west side and in Battery Park City, make it a more pleasant experience like other cities around the world. I mean, it's been such a hard time for New York City. And I haven't traveled much. I don't even have a passport, but even just looking at these, you know, Netflix or whatever or watch like a drone flyby of cities in Europe or the Middle East or even Asia. America, which what's ones, Times Square's neon lights were like the standard for the world, and that's and there are just so many cities which I've never even visited myself. It'd be nice if I were able to do that, but this is almost 2 hours just sharing reflections on Macy's. Um, here's another article from that was from back in September though, and I bought before September, saying the bold new chapter. It's the bold new chapter, which is it looks like selling a lot of stores and a lot of their real estate, and then shifting, like rotating the money into new ventures and acquiring, yeah, for the momentum. But if we even wiki Macy's, I mean, I guess it's been around since 1858. So here's the store that I'm talking about in New York City, the Herald Square flagship store, R.H. Macy and Company. Says the flagship in Herald, it founded in 1858. I didn't realize it was that old. I thought that it was 125 years, which is in 2 years actually. It says the flagship store opened in 1902. So that means it's 120. It's 123. It's 123 years this year. So then in 2 years it'll be celebrating its 125th. It's the largest department store by retail sales in the United States. 94,000 employees and an annual revenue of $25.3 billion in 2023. 450 locations in Puerto Rico and Guam. So it still is, yeah. Roland Hussey Macy, dry goods store between in downtown Haverhill, Alfred, Massachusetts. No kidding. All his stores failed. 6th Avenue between 13th and 14th. No kidding. In 1858. Sales sold 1108. Branding emblem store was a rooster. The Red Star did not replace until after 1862 during the Civil War. The store, Santa Claus. The union exhibits and customers accepted cash into the night. It also offered money back guarantee, although accepted cash in the 1950s. Robert M. Valentine, I don't know, this of Wisconsin. He's the husband of a cousin. Macy died from inflammatory kidney disease, from Bright's disease. LaForge died the following year, and Valentine died in 18, longest? He was young, 50, 60, 70. Oh no, this is partnership. But Robert and Valentine. Oh. The Strauss brothers, R.H. Macy and Company. Yeah, acquired the company. Mason Strauss. Had previously held a license to sell to China and other goods in Macy's. Or no kidding. Wow, in the 1800s, they were doing business with China. Interesting. The flagship store was opened in 34th Street and Broadway, 1902. Very interesting. Can we read this aloud?
1902, the flagship store moved uptown to Herald Square at 34th Street and Broadway, so far north of the other main dry goods emporia that it had to offer a steam wagonette to transport customers FR.
Yeah, the reader's not working that well. Usually it would read right through it. Maybe I have to highlight the whole paragraph. Will it do that?
In 1902, the flagship store moved uptown to Herald Square at 34th Street and Broadway, so far north of the other main dry goods emporia that it had to offer a steam wagonette to transport customers from 14th Street to 34th Street. 8. Although the Herald Square store initially consisted of just one building, it expanded through new construction, eventually occupying almost the entire block bounded by 7th Avenue on the west, Broadway on the east, 34th Street on the south, and 35th Street on the north, with the exception of a small pre-existing building on the corner of 35th Street and 7th Avenue, and another on the corner of 34th Street and Broadway. This latter five-story building was purchased by Robert H. Smith in 1900 for $375,000, equivalent to $14.2 million in 2024, with the idea of getting in the way of Macy's becoming the largest store in the world. It is largely supposed that Smith, who was a neighbor of the Macy's store on 14th Street, was acting on behalf of Siegel Cooper, which had built what they thought was the world's largest store on 6th Avenue in 1896.
Huh.
Macy's ignored the tactic and simply built around the building, which now carries Macy's shopping bag signed by lease arrangement. 14. In 1912, Isidor Straus died in the sinking of the Titanic at the age of 67 with his wife, Ida. 15. The original Broadway store was designed by architects De Lemos and Cordes, was built in 1901-02 by the Fuller Company, and has a Palladian facade, but has been updated in many details. There were further additions to the west in 1924 and 1928, and the 7th Avenue building in 1931, all designed by architect Robert D. Cohn. The newer buildings were increasingly Art Deco in style. 14. 16. In 2012, Macy's began the first full renovation of the iconic Herald Square flagship store at a reported cost of $400 million. 17. 18. Studio V Architecture, a New York-based firm, was the overall master plan architect of the project. Studio V's design raised controversy over the nature of contemporary design and authentic restoration. 19. The building was listed on the National Register of Historic Places in 1978 and designated a National Historic Landmark in the same year, 2021.
All right, so banned fur in the 2020s. Fur is more, wow, really? Other exotic things such as reptiles or ostriches are banned. Oh my god. Tragedy in Philadelphia. Art House Management and Bridgegate Capital wanted to do a merger and acquisition, a takeover rejection in January 2024, and they're closing 66 more stores, 50 stores closing the end of 2024. 65 Mason closing stores represented 10% of total sales. Blue Mercury. Oh, they own Bloomingdale's and Blue Mercury? I didn't know that. No, they don't. They do? They own Bloomingdale's? No, they don't. Wow, also an old store, 1861. Lower East Side. Oh, it's Federated Department Stores, which Federated was renamed Macy's in 2007. It was Federated Macy's in 1994. There we go. It's Federated Department Stores is the umbrella. It's a holding company. It's S&P 400. Oh, okay. And now then they're trading under M. So that's why. So it's a holding company now. So now that's different. So now I need to track. I wasn't doing that. There's a triumvirate here of chains: Bloomingdale's and Blue Mercury. So that's a total of 722 locations. All right. Macy's has been headquartered in Macy's Herald Square since 2020. It was previously headquartered in Cincinnati, Ohio. All right. All right. From 1945 to 2020. All right. I wasn't aware of like the real estate and I don't think like this. Federated Department Store chains, F.R. Lazarus and Company, Columbus, Ohio, in 1851. Let's see. So they have it. From Columbus, Ohio, headquarters in New York City. All right. That makes sense. Puerto Rico, Guam. All right. That makes sense. Robert Campo. He's Canadian. Yeah, I'm just not, I'm not a Wall Street guy, I'm a math teacher, simple math teacher. Wow, all of this is theirs? Oh, previous nameplates. Macy's Backstage, market by Macy's. The accumulated list of department stores owned by Macy's. Well, Macy's. 2021, they got Bloomies. What about Bloomingdale's in 1860? What? No, 1930. Boom Mercury in 2015. Okay, so they bought it, they acquired it in 1994. So that was the transition year for this company. So do they trade under any other names on the stock market? And it's an S&P 400 mid cap. Yeah, so it's off the S&P 500. Very interesting. I didn't realize that I was holding that. I thought that it's also Bloomingdale's and Blue Mercury. Let's see. Marshall Field's in Chicago. Yeah. The Kaufman family role in Pittsburgh history. Yeah, it used to be Pittsburgh customers. The name changed for reception of Macy's in Chicago. Kaufman. Shady Side Academy. They acquired Kaufman's, was a department store that originated in Pittsburgh, Pennsylvania. 2006, that was a while ago. Do you like Macy's? All right, it's been 2 hours. I'm signing off. Thanks for these are just a few reflections in my life on the iconic American store Macy's. Thanks for watching, and please subscribe and follow. And I don't know, it was on my mind tonight. I'm not exactly sure why. Okay, that's time. Take care. Take care of yourself.